Well, global share markets did lift on Friday, and across the week they did in fact lift around 1 to 2% out of the US, which is a little bit surprising given what is going on around the world at the moment. If you look at the US, their economy has definitely slowed down, and while we're looking at the Europeans, they're also looking a little bit edgy given that there's a huge amount of action in that part of the world, and they're trying to avoid a potential debt crisis. Now, over the weekend, some of the finance ministers from the EU did meet for another talk fest to try and find a resolution, but it doesn't seem like any resolution has come just yet, and the major concern being that they've got to try and keep their populations and voters at bay and try and keep them happy while bailing out some of the most indebted countries out of the European region. Now, could potentially go on for a few more months, and this key uncertainty will be a big player for equity markets and also for currency markets around the world. Now, this could mean a bit more volatility for the Kiwi dollar. We could see a bit of a downward stretch for the dollar, but right now we're holding fairly firm against the US, trading around 82.70 against the US dollar early on Monday morning. Well, we're getting into a pretty critical part of the year for US imported beef prices. Typically, around this time of year, we do start to see beef prices eased off just a little bit. We're getting to the end of the summer period and into the colder months, when most of the grillers in the US are put away for the next few months, and we start to see a little bit more of a change in the beef demand fundamentals out of the US market. And over the past week, we have in fact started to see imported beef prices ease off just a little bit. Fundamentally, you'd have to say that the US market should be a bit weaker than what it is. Domestic demand has dropped off and more supply is coming on board. But there's been one factor that has really held up the US market over the past 12 months, and it really comes down to the fact that they have been exporting a lot more product than they previously have. The low US dollar is meaning that there's been more appetite for processors to export more product off their shores. And the other thing is that there's been a few more markets that have opened up, particularly South Korea. But at some point in time, you'd have to say that prices will start to ease off just a little bit as some of these negative influences come through. This may mean that scheduled prices back here in New Zealand will also ease off, and this may happen over the next few months.